Hi guys, today we have a guest on the channel. It's CJ from Trading with CJ. I'll let CJ give his intro, so let's get straight into this.
Thanks for having me, Fifi. I'm CJ. I have my own channel, Trading with CJ, where we cover all things stock market, investing, and personal finance. And me and Fifi actually did a video on my channel where we spoke about dividend investing. We covered some key criteria when investing into dividend paying stocks and some stocks that met that checklist. But today we're mixing it up and we're talking about a whole different type of stock, and that is speculative stocks, stocks for the future. Now these could fall into either value or growth investing, and it's not for everybody, but it's personally my preferred type. So we're going to cover what it is, how does it compare with value or growth investing, and some of my favorite stocks to buy right here, right now. But before we do, please remember we are not financial advisors, so if you are planning on investing into the stock market, you should always do your own research first.
Thanks CJ. So what do we mean by speculative stocks? Well, a speculative stock is generally a company that has significant share price growth, which the market has yet to price in. It could, for instance, be a newer or riskier type of disruptive enterprise or an emerging technology. Remember vaccine technologies in Q1 of last year and all of that Moderna hype? So therefore, we are speculating on the future growth prospects of a company. Now, of course, as with all investing, nothing is guaranteed. Stocks can go up or down at any given moment, and there's always an element of risk. However, we can generally eliminate some of that risk by investing into companies that are more established, making profits, and have consistent growth. For one, there is more financial data and news to digest into our research process, whereas with speculative companies, we're investing based on more limited information, a business that is not yet mature with solid prospects or future growth with the aim of getting incredible returns. There are two main reasons a company could be classed as speculative. One we can describe as contrarian investing style, where there's been problems with the company. Maybe it suffered bad news, negative earnings, or they haven't met their expectations. This could lead investors to selling their shares and the stock price falling. And as an investor buying, we take the contrarian position that at that price it's an amazing discount and you will see good value. Cue Boohoo in 2020, which suffered a massive shock to its share prices following Labour practices and became a popular stock discussed in the YouTube community anyway. So over to CJ to chat a little bit about Boohoo. I do remember you were a fan.
Boohoo is the big online fashion company within the UK, and it suffered 3 major crashes in 2020. What a year they had. The first one was the global crisis back in March, sent it down to huge lows. It then recovered and went on to hit highs again, pre-crash level highs. And then we had this bit of news come out. Boohoo to investigate Leicester supplier over exploitation claims. So this obviously hit the headlines all over as to be expected, and it sent the stock crashing down about 45% again, which is absolutely huge. Now, this wasn't directly Boohoo's fault, this was a supplier, but nevertheless, they should have known about it, and it crashed down. However, if you saw potential in this buy, then you was in the money right here, because this went on to recover again and starting to pick up. It went up to about £3.78 per share, and then another bit of news hit them again. Boohoo shares crash after confirmation PwC to step down as fast fashion giant auditor. So they lost their auditor. So it's crashed down again. This time it was about 35%, but still 35% again, which they just managed to recover. So it's been crashing down, but it's been crashing down for things that aren't necessarily 100% their fault. Okay, it's the news. The news has been coming out around them. It's not bad earnings, it's not bad profits, etc. It's just some news surrounding them. So if you still see potential in their company after this news, and if you did fancy this as a speculative, more risky investment, then you'll be sitting on some very nice gains right now.
Cheers, CJ. So contrarian is a risky style, guys, because at that moment in time, you're investing into a company that clearly has some sort of problems. So you are speculating on the future and hoping that it will recover. There is a really good book on the topic called Markets Never Forget by Ken Fisher. And it is a little bit of a hard book to get hold of these days, though a good book on contrarian investing as a whole. It's also a form of investing popularized by Warren Buffett, where he looks into contrarian picks, but with strong quality indicators, making sure that those picks have a nice protective moat around their castle. Whereas here we are taking on a much greater speculative view. The second type is where a company that has huge growth potential, maybe they're an innovator, a game changer, they could be new to the market and not yet proven, but you're investing in them with the aim of getting in early at a super cheap price for this company to go on and become the next Amazon or Apple or what have you. This would be classed as a speculative growth stock. Now over to CJ to give you some examples of a couple of his favorites.
There are a lot of great companies out there, but I'm going to give you 2 of my favorite ones right here. And I want to say that I do invest into both of these. I love them, and I think the potential for growth is absolutely huge. So the first one up is probably the most speculative and risky company out there on the market today, and that is ticker symbol SPCE, Virgin Galactic. So they are the first publicly traded company in space tourism. The founder of this company is Richard Branson, and what they want to do is they want to take the everyday person with a lot of money into space. So you can get a ticket, get on this flight into space, and yeah, have incredible views of the Earth from up above. So this is absolutely incredible, one of a kind. No other companies out there is doing something like this. They have an incredible management team behind them. They have a lot of big investors that are partnered with this company. Also NASA have a contract with Virgin Galactic. Although this is extremely risky because this is a company that is not yet profitable, okay? It's making a loss at the moment, and these flights, we don't actually know when they're going to be allowed to happen. They're hoping that this year will be the start of it. They need to complete a test flight, which if you are a follower of Virgin Galactic, keeps getting delayed or failing, one or the other. So this is extremely risky, but once that test flight goes ahead and they get FAA approved, hopefully they can start to roll out these flights and they're going to make some very nice money. This is extremely speculative and extremely risky. The share price for this company over the last year has just been up and down, up and down. This is basically good news goes up, bad news crashes down. And I feel like it's going to be like this for a long while. So if you are going to be a shareholder in Virgin Galactic, you've got to be ready to ride those waves on this one. But I do think the potential upside is absolutely huge. And the second company up is slowly becoming my largest position. I absolutely love this company. Ticker symbol TTCF, Tattooed Chef. Now this is positioned in a sector which is growing and growing, the vegan sector or plant-based food sector. This specializes in plant-based products. And you can see here some of the products that they have: smoothie bowls, vegetable blends, meat alternatives, pizzas, etc. This is growing nicely, and we can see the different products over the years. They had 2 products back in 2017, and as of this year, they're expecting 62 different SKUs. So this is growing nicely, and the sector that it is in, more people are kind of going towards meat alternative products. Whether they want to turn vegan or not, they're including this in their diet now. So I think this is really in a good position to capitalize on this. Tattooed Chef only went public a few months ago via a merger, and they have some big partners. Costco and Walmart are 2 of their biggest partners right now, and you can see this is a list of other companies that are looking to get into within the next 60 days. So hopefully by 2021, the start of this year, a few more weeks, a few more months, they will start to build up more and more partners. And one of the key things I want to show you about this company, obviously without going into too much detail here, but they have built a 68% revenue growth from 2018 until what is expected in 2021. That is absolutely huge, and 640% year-on-year growth achieved. This is the key thing here, with no investment in marketing and brand. So they haven't even started, they've only just recently built their online website. It's still very, very early days, but 640% growth. They have a lot of cash sitting on their balance sheet as well. Things are looking really promising for this company in a growing sector as well. Now, obviously, I've done videos on both of these companies on my channel, but these are 2 of my favorite companies. I absolutely love the direction that they are both going in.
That's our explanation on speculative stocks and also some top picks. Let us know what your favorite speculative stocks are down there in the comments below. A huge thanks to CJ for popping by. Do swing across to his channel, link down below in here somewhere. And here are some more videos for you guys to get your teeth into.